Your net cash flow position. When you look at the net cash flow statement itself, you will notice that there are two main categories, your inflows and your outflows. And within the inflows itself, there are two subcategories, your active income and your passive income. What is an example of an active income? An active income are income that you receive, that you have to work for it. For instance, you work for a company itself and the company pays you a salary. And that is an example of an active income. When it comes to passive income, what do you think then? Income that you don't have to work for it? Well, not exactly. There are schools of thoughts that says that passive income, you have to work for it as well, in the sense that you have to monitor, you have to manage it. For instance, if you have a property itself, you decided to rent out one of your rooms, do you have to monitor? Do you have to manage the expectations of your tenant? Do you have to draw up an agreement with him or her? These are things that we have to do as well. If you have an issue with naming conventions, probably you can call it primary source of income and secondary source of income. Let's take a further look. When you look at your active and passive income, the total inflows that you receive, right? The total income that you receive, it forms your total inflows. What we want to look at is your net cash inflow. So what exactly is net cash inflow? Basically, is inflow that you receive after deducting your CPF contribution. Let's look at your outflow then. Within the outflows, there are two subcategories as well. They are your fixed outflows and your variable outflows. For instance, you decided that you are needed to manage your expenses by reducing your outflows. Where would you cut? Would you cut from the fixed or would you cut from the variable? Variable, am I right? Well, not exactly, because if you look at it further, you can also cut from your fixed outflows. For instance, you can always right size the house that you're staying. Instead of driving a car, we can choose not to drive a car, so on and so forth. When it comes to variable expenses, these are expenses or outflows that is more obvious in nature, that we can manage it. But the problem is, if we do not list down all the numbers, would you ever know where did your money go? So net cash flow statement gave you a snippet of what is your spending pattern, what is your position. Are you in a surplus position? Are you in a deficit position? Let's look at the next slide. What would you do, for instance, after putting down all your numbers? You notice that you have been receiving a consistent surplus. It can be a few $1,000s, it can be more, or it can also be a few $100s. What are some options that you can do to maximize this surplus that you have? The flip side. What happens after listing down all these numbers? The darkest secrets of your spending patterns has been revealed. You are actually in a deficit position. What are some options that you could have? Let's take some time to discuss what are some options that can be presented to you. If you are in a surplus position, obviously one of the more common options that we can have is we can invest. But importantly, if we decide to invest, we need to invest according to our investment needs, the time horizons, the objectives that you have, and in line with your risk profile and your personal circumstances. Another practical options that we could all have is, supposedly you are a Singaporean or a Singapore PR and you have CPF accounts. We can top up our surplus into our CPF special account, for instance. CPF special account currently it has enabled you to enjoy a personal tax relief of up to $7,000. In other words, for instance, your tax accessible income is $50,000, and assuming that your CPF minimum sum has not been met yet, and you still have funds that you can top up. Okay, and assuming you top up a maximum of $7,000 for that year itself, your taxable income will be reduced by $7,000. Effectively, if you were to top it up and enjoy the tax relief, your taxable income will be $43,000 instead of $50,000. The next thing, you can also reduce incurred debt. As we all know, if we take on the debt, we incur interest. When we incur interest, we incur it can be an enormous sums of money, correct? If we choose to periodically reduce our incurred debt, if the eventual amount that you're paying, the interest amount that you're paying, can be reduced correspondingly. And finally, we can also review our financial plan. For instance, you may want to review your insurance plan, you may want to review your financial position, whether to enhance your retirement funding, whether to make sure that there's a portion that's set aside for your education funding for your children, so on and so forth. Okay, let's look at cash deficit. One important decisions that we have to make, in fact, whether you are in a surplus or in a deficit, is to understand why are we in that position. Because if we do not know why, we cannot resolve, we cannot tackle that situation. So importantly, the very first step that we ought to do is to have a spending plan. A plan to spend even before we spend our money. This is because we want to manage our needs and our wants. And to adopt a pay ourselves first approach, to save first, then whatever that's remaining we spend within our means. In fact, I would even dare say, and just want to encourage you, that you should not spend within your means, especially you are in the deficit position. You have to spend way under your means and get whatever additional amount of money that you have to pay off your debts. And very importantly as well, if we notice that we have a habit of incurring unnecessary credit, such as using our credit cards to consume, you may need to want to go for plastic surgery. Take out your scissors and cut off all those unnecessary cuts that has caused you to spend more than what you earn. Let's look at net worth. Do you know how much you are worth? Well, if you do not know, the simple formula is when you calculate your assets minus away your liabilities, that is your net worth. Basically, what you own versus what you owe, that would be your net worth. Let me ask you, if you look at your screen right now, you notice that person A has a higher assets and person B has no debt, although he has lower assets. Between person A and person B, who has a higher net worth? Yes, you are right. Person B has a higher net worth. For this example itself, person B's net worth is 0.5 million, which means 500,000. Whereas person A has a net worth of 200,000, 0.2 million, even though he has assets that are 1.5 million. Let's take a step even further. Do you reckon that for a person that has amassed a fortune of 300, 400 million, can he has a lower net worth comparing to people who are earning not much, a few $1,000s per month? Is it possible for them to have a lower net worth as compared to people like us that earns only a few $1,000s? Well, there's one person that comes to mind. His name is Mike Tyson. Mike Tyson has a habit of spending unnecessarily. He bought Bengal tigers for $140,000 for 2 tigers. He bought a bathtub for his first wife, and it resulted him $2 million. The bathtub actually cost $2 million. And finally, he spent on cars unnecessarily, incur as much as $45 million just on cars alone. So even though he has a fortune of 300 to 400 million, just imagine, eventually he went into a negative net worth position. So it's very essential that we watch where did our money go. Let's look at net worth. How do we calculate our net worth? Essentially is when you calculate your personal assets plus your investment assets as well as your liquid assets, minus away your current liabilities and your long-term liabilities. That would be your net worth. Okay. Let me ask you one example. Some of you are looking at the screen right now and you may have noticed there's car that's being listed there as a personal asset. Then, is car really an asset? Well, you're saying that car is a liability. You are right in a certain sense, but car is also an asset. So essentially, car is a depreciating asset because when we sell it, there is still a value that you can put your value in this net worth statement as well. So after listing down all these numbers itself, when you get your assets minus your liabilities, that would be your net worth. We want to encourage you to really put in the effort to put down all these numbers because it will give you a snapshot of your financial position. And should you tread towards a negative net worth, you could actually arrest the problem in time.